And joining us now to discuss is Eurasia Group Director for China, Michael Hirshon. Michael, Lighthizer seeming to sort of bring some rationalism to the process here, trying to manage expectations, right? But if you look at what the administration has been saying, particularly about those agricultural purchases, and what he said as well, there's been a lot of skepticism about that. Do you buy it? Do you think that it's a reasonable target?
I think the targets are very aggressive. The targets also are probably the part of the deal that matters the least to Robert Lighthizer and really broadly to the business community. He's much more focused on making these structural changes to China's economy that he discussed in the interview you showed. So I think his advisors, President Trump's advisors, are wrestling with this challenge. These purchase commitments are the part of the deal that matter most to President Trump. Most of the rest of the policy community and business community focused really on the substance.
But those purchase commitments, we heard, I think I was reading one article, 5 times in the past, the premature announcement that we had a phase 1 deal, the Chinese would begin buying, and they never did. Why do we think that's going to change this time around?
Well, I think now that you do have a deal that's agreed and you have a commitment on the U.S. side to remove some of the tariffs, will at least bring China into the market. And I think from Beijing's perspective, this is a pretty attractive deal for now. They don't get everything. Most tariffs are still in place, but they've reduced the risk of further escalation, and they haven't had to make really deep concessions on the issues that are really at the center of this trade dispute, particularly over technology issues. So for China to be able to purchase a lot of U.S. goods, much more preferable than having this threat of further escalation and having pressure to give in on tech issues in particular.
How likely do you think a full-on trade deal with China is announced before the election?
Very unlikely. I think you see just how difficult it was to make progress on this phase 1 deal, and these are relatively politically easy measures on both sides. Phase 2 deal is going to mean China, again, making some steps on issues like subsidies for its domestic technology firms. And on the U.S. side, it will require additional tariff relief, which is going to put President Trump under pressure to show that he's actually accomplished something in exchange for tariff relief. So the political bar is high. We head to an election, just throws in more uncertainty. I think very, very unlikely that we see a phase 2 deal before the election.
It's interesting that you point out the dichotomy between what the president wants and between what the business and policy community wants, because the markets seem to be on the side of the president in this case. Well, is that fair to say, Alessio? Because we see markets pushing towards record highs here, even as we don't necessarily have those structural reforms that Michael's talking about.
I think the market has we've been at this for 3 years, right? So the market knows that by now it has gotten accustomed to the fact that we're not going to have a binary outcome, that one day we sign the deal and it's either good or bad. We are at this for the long term. Under this administration, this is the new way politics are done. The market is now reacting very well, even to a deal that you could, if you analyze in details, you could see the flaws and you could say, okay, good progress, but the market is reacting well because this is happening at a critical time when the data globally is actually starting to rebound. So if you attribute the bulk of the data deterioration to the uncertainty around trade, and you are able to just remove the uncertainty and the probability of a further deterioration in these negotiations, especially after what we saw with Hong Kong, the market takes it very asymmetrically, right?
So what upsets the market as we go into 2020? We have a presidential election year. China has no reason to really budge or do anything till after the election. And we have a president who shoots from the lip. So what does the market need to be aware of as we go through the next 6 months, 10 months, full year?
I think it's really 2 things. So one is the possibility that phase 1 deal, phase 1 falls apart. Not my base case, but this deal is going to be continually under stress from tensions in the broader relationship. Hong Kong, we've got an election coming up in January in Taiwan, South China Sea, U.S. actions against Chinese technology companies. All of this is going to stress the deal. And for example, if these tensions really flare up, it's going to make Beijing that much less likely to step up and make huge purchases of U.S. soy and U.S. pork and other goods. So that's the first risk. Second risk, harder to quantify, is what happens outside of tariffs. I think the U.S. Trump administration and Congress are going to be throwing a lot at China, again, on technology companies, national security measures. Tech really is the focus here. Beijing is going to be doing similar steps to really reduce reliance on U.S. technology companies. So This is harder to quantify than tariffs, but has a big impact on U.S. tech firms for whom the China market is important, and Chinese tech firms and their global supply chains. So this tech war shifts further to non-tariff measures, and that's something that I think absolutely people, particularly in the tech sector, need to be watching.
And we will too. And we'll have you back to talk about it. Michael Hirshon of Eurasia, thank you so much for being here. Appreciate it.
Hey investors, Zach Guzman here. Are you interested in learning more about the markets and getting the latest financial news? Well, then click right here to subscribe to our Yahoo Finance YouTube channel. Get the latest up-to-the-minute market analysis, big interviews in the world of finance, and information on how to manage your money every day wherever you are.